So let's pick up where we left off. We are told to prepare a bank reconciliation statement starting with the cash book balance. But there are three balances shown here. Which balance then do we start with? And the answer to that question is the closing balance for the previous period, which would be the opening balance for the next period. Because we are preparing the bank reconciliation statement as at April 30th, therefore we would use the balance as at April 30th to begin our bank reconciliation statement. So we begin with our balance as per cash book, and in this case, before we write the balance as per cash book, we need to write the statement, bank reconciliation statement as at, and give the date. In this case, it would be as at April 30th, 2021. And we are starting with the balance as per cash book, and this would be the closing balance or balance carried down as at April 30th. Next, we are going to look at the items which were not included in both documents. In this case, there is a receipt in the cash book of $500, 2 withdrawals on the bank statement, and 1 deposit on the bank statement. The formula tells us to add outstanding or unpresented checks and subtract any deposits not yet recorded by the bank. So starting with our balance as per cash book, we are going to add outstanding checks and subtract unrecorded deposits. This is just a reminder note here that the outstanding checks are checks which have been written but not yet cleared by the bank. They have been included in the bank statement, in the cash book, but not in the bank statement. These are subtracted from the bank statement balance. But remember, we are starting with our cash book balance, so they are added to the cash book balance. Unrecorded deposits, also called bank lodgements, or unrecorded bank lodgements, deposits made and recorded in the cash book but not yet cleared by the bank. These are added to the bank statement balance and therefore subtracted from the cash book balance. So let's look at our 4 entries and determine what are we going to add to the cash book balance and what are we going to subtract from the cash book balance. So the bank lodgement of $1,800, which represents a salary, will be added to the cash book balance because that is cash coming in, right? So add outstanding salary, which has not yet appeared in the cash book, $1,800, and we are going to subtract payments reflected in the bank statement but not reflected in the cash book. In this case, we have 2 standing orders, one for insurance payment, the other for a loan payment, and we have a deposit or a receipt of $500 which has not yet been added to the bank statement. Therefore, when we look at our unrecorded deposits, we have our king and our unknown bank charges, which are insurance and loan payment standing orders. We add the outstanding salary, subtract the unrecorded deposits and unknown bank charges, and arrive at our bank balance as per bank statement of $2,397. So how do we know if this is the correct balance? We go back to our document, which would be our bank statement, and in fact we see that the bank statement balance is $2,397, when the cash book balance was $1,397. So we have just reconciled our cash book balance with our bank statement balance, starting with the cash book balance. If we start with the bank statement balance, we do the inverse. So we subtract the unpresented or outstanding checks and add the unrecorded deposits. And here's a worked example starting with the bank statement balance of $2,397. We subtract the outstanding salary and we add the unrecorded deposits and the unknown bank charges. So let's see if this was in fact our balance as per cash book. And if we go to the cash book, we are going to see that our balance as per cash book is indeed $1,397. So we have reconciled our bank statement with our cash book, starting with our bank statement balance. Okay, so thank you for watching, and that's how you prepare the bank reconciliation statement, starting with either the cash book balance or the bank statement balance. In the next video in this series, we're going to be looking at preparing the bank reconciliation statement by firstly revising or updating the cash book.